Gold prices fell for the second straight day as purchases ebbed in India, the world's biggest consumer of the metal, and investors awaited a European Union summit on the region's debt woes. Last week, demand in India slumped 53% from a week earlier, according to UBS AG. Standard & Poor's yesterday said it may cut the credit ratings of 15 countries that use the euro, pending the outcome of the summit that starts December 8 in Brussels. Gold futures powered losses as much as 1.7%. Given the heavy headline risk and the lingering doubt that politicians will deliver a conclusive solution to the Eurozone crisis, participants feel safer on the sidelines, Edel Tully, an analyst at UBS in London, said in a report. Gold futures for February delivery fell 0.2% to settle at $1,731.80 an ounce at 1:46 p.m. on the COMEX in New York. The metal dropped 1% yesterday. The price has climbed 22% this year, heading for the 11th straight annual gain. Physical demand may not materialize unless gold sees a bigger correction to $1,680, Tully said. European Central Bank President Mario Draghi will probably cut interest rates by 0.25 percentage point, according to economists in a Bloomberg survey. Draghi signaled last week that the bank may step up its efforts if euro area governments forge a closer fiscal union. It's almost a certainty that they are going to cut rates, but the bigger drama takes place at the end of the week with the European Summit. Adam Kolfenstein, a market strategist at Archer Financial Services Inc. in Chicago, said in a telephone interview. Gold is waiting like every other asset class to see what Europe will do. Futures jumped 3.6% in 3 days after the ECB cut rates by 0.25% on November the 3rd. Holdings in gold-backed exchange-traded products fell yesterday for the third straight session. Silver futures for March delivery rose 1.1% to $32.74 an ounce on the COMEX, ending a three-session slump. The metal has climbed 5.8% this year.
With the global financial instability at this point, Kunatakorn, I think gold has posed to be an important commodity once again, as we're still not sure whether the global economy will tumble down.
So whether it will re-emerge as a safe haven asset again?
That's right. So let's go to the line with Kun Pawan Nawatanasapt, the Vice President of YLG International Company Limited. สวัสดีครับคุณพวัน
สวัสดีค่ะคุณองค์อนันต์และคุณณัฐกรค่ะ
สวัสดีครับคุณพวันครับ
สวัสดีครับ Gold price has recently maneuvered in a short ranges. Can you please elaborate the factors affecting the gold price?
I believe that because of the direction of gold is not so clear right now. Because they always have good news and bad news, either coming from European side or coming from the American side. For example, last week we hear that German and French they are conclude to find out that they're going to be disciplined to control for the spending of the budget.
That's right.
But certainly after that is helping the investor to be coming back to start to invest with the gold. But after next day, they have S&P Standard & Poor's come to announce that they might discredit for the European country for 15 countries. This is make the investor that feel not so sure. This is the thing that always drive the gold up and down, and it will be not big range because the news is just like a headline news, still not really action yet. So can see that between now to end of the year, because of it's almost the end of the year, actually most of the big investors, mostly they close the file, they close the book, so not so much activity. This is the main thing that drives the gold, not so much movement.
I see, Kun Pawan. And do you expect gold price to reach $1,800 anytime soon? And if not, what would be the forecast?
From now to the end of the year, we believe that we might see 1,600 for the support. 1,680 for the support, and for the resistance, possible to see 1,790. The range will be a little bit big because of from now on to the end of the year is almost like 2 weeks. And we don't know that whether the news will be good or bad. If they have good news continuously, so the gold is possible to be go up. Or if have bad news continuously, it might drive the price of gold to come down as well. So investors have to be follow up the news always.
Well, I see. I guess the news has to come by this Friday, whether the EU summit will resolve in a peaceful manner or not. So what is your strategy for investing in gold at this moment?
We have to follow the news. I cannot predict now. It's very hard to say. But if they increase the interest rate, I believe that the gold definitely will be going up.
Okay. Well, thank you very much, Khun Pawan, for sharing your info.
Thank you.